Welcome to The New Next, a podcast that addresses current events and how they will impact the future. Co-hosted by the inquisitive public speaking champion, Mike McVeigh, and energy, economics, and technology expert, Matt Jensen. Join us as we explore all things energy, economic, tech, and political, and how they will affect our future.
Podcasts typically grow by word of mouth. If you know anyone who would enjoy this content, sharing this in a message or by posting on social media would mean the world to us. Thanks for listening, and let's get started.
Discuss the economy.
Doesn't everybody? It still isn't doing good. So anything else?
Yeah, it's been...
All right.
Go ahead.
No, please. Sorry, please.
All right, you can do the lead on.
Well, so unfortunately for us, it's been a couple weeks since we have talked, but gas prices have stabilized a little bit. They're exactly 300% of where they were when this all started earlier this year, at least in Oklahoma City. So we've got a lot of things that they might be connected, and I know there's some different talking points, but we've talked a lot recently about how different things have fallen, like cryptocurrency, and various versions of that have had some issues. But how is the American economy specifically? Is there more things we should, like, are we getting at a stable place, or are we just at a soft like, are we on the part of the roller coaster where we think we're done and then we're getting ready to have a big drop again?
Yeah, who knows, right? But it reminds me a lot about 2008. So the market's usually a leading indicator. And in 2008, you had this period where there was kind of like a pullback, and a lot of people have felt that the economy was super hot. At the time, you had all these large leverage buyout, large private equity deals, and the real estate market started to seem like it was going to crack. But it's just been interesting because you had the stock market crashed it was down over 20%, the S&P, and now I think it's back to down 17%. So it was up this week after, I think, falling 11 weeks in a row. But it definitely seems like there's a specter of recession. So the Federal Reserve has increased rates, and I think, in my opinion, is too late, right? They had... Oh, go ahead.
So people like me, what is a specter of recession? Like, what's that kind of mean? Because I don't know if that's a common term for us plebeians.
It seems like it's in the air, so to speak. So Bank of America does a fear index, and that's basically at 0. And that, indicates that people think that it's not going to be a great time for stocks. Consumer confidence is at its lowest since they started testing at the University of Michigan survey in the 70s. And there's been very little revisions of earnings. So the S&P 500 basket of companies are basically projecting that earnings will still grow next year. Okay. Which, if you kind of think about that, so many people have so much money to spend, the fact that they're spending so much more in the big basket of goods, like in fuel and core food, would mean likely that spend is coming out of other areas. And what you've seen, a lot of businesses are pulling back spend for internally, whether that's job cuts or whatever. Like saw Novartis today, it's a big pharmaceutical company out of Switzerland. They're cutting 7% of their total staff. There's been a huge cut both in crypto, but also in a lot of growth tech stocks, stuff like Netflix. So the price to earning ratio for 2023 is not priced in slumping demand and credit tightening. And it really seems like people are like, you know, if you listen to the conference calls, they're like, well, we see that there's a good likelihood of a recession's coming, but we personally won't get affected. Everybody else will, right? So once the, you know, the earnings forecast tends to go down, then the market technically becomes expensive again. I think really the exclusion of this is in oil and gas companies. So they're, after years of losing tons of money, they're making a lot more money based on, you know, the global market price being up. But it's just it's a weird time. So it kind of the consumer confidence, I think, is really interesting to watch, and you've seen a huge explosion in consumer credit too. So consumers are spending to try to maintain the going into debt to maintain the same quality of life that they had before. With that too, it'll be kind of interesting to see. So there was, I think, 10 million jobs available, especially with like the high tech jobs out there, and some of those have gone away. So large companies like Facebook, Microsoft have gone on hiring freezes, but they'll still be hiring, right? So it will be interesting to see if kind of the tech companies get absorbed by, or tech company layoffs get absorbed through existing jobs, and how some of the stuff will be played out. But it's an interesting scenario. And with the supply chain been in such a disarray that it's been, a lot of people have had to basically, like, you know, before you could order stuff and expect that it would show up right away. And now, in the most recent months, people have had to order in bulk because they don't know when they're going to get it. So there's also kind of like this situation where you might have this massive inventory and almost deflation in some stuff through price cuts. But the market's been so dislocated. So it doesn't look good, basically. But who knows? Hopefully it is.
Yeah, we're still dealing with various supply chain issues since I'm a supply manager. And it's interesting what comes in immediately or way ahead of schedule. Like we're told this might take a month to come in, and then it's in like immediately.
Yeah.
And like, okay, that's interesting. And then there's other things that they said it'll be in 2 days, and then about 3 months later, it finally comes in. And then because of that specific, so it was mop sticks. It was the stick itself, doesn't have the mop head on it. And we waited 3 months for those things to come in. And then I went ahead and ordered again some more because those were already pretty much accounted for. Mm-hmm. And they all came in the next day.
That's hilarious.
And I ordered double the amount. So, but then there's other things that, like envelopes are still a big issue. I'm going to keep on mentioning envelopes because it seems like a lost art, but certain clothing types, generally a rarer type, but we ordered in October, and I've got a feeling that it's not going to be in during 2022.
That's wild.
I think it's going to be 2023. And it's those kind of things that scare me because it's not this, like Post-it notes have gone down in price in the past 5 years. In fact, they're lower now than they were at the beginning of the year. Post-it notes.
Yeah.
But cans of Coke, in fact, a 12-pack, I just saw it in the store today, and I don't know how this compares to all the stores. I don't normally shop at the store, but it was $6.89 for a 12-pack of Coke or Dr. Pepper. And that cracked me up because I remember specifically last year when I saw it for $5.99, and I was like, man, this is really getting expensive. Because this is now almost 50 cents, or it's just at 50 cents per can, which is insane when you realize that just a year before it was less than, it's like $4.49 or $4.19 for a 12-pack. So it's small things, but things that do make a difference and stuff.
Yeah. Yeah, and
no,
you know, kind of like with like the integrated global supply chain for years, it's almost been a driving factor of reducing prices, and the fact that that's so dislocated now, I think it's both first off, I don't think with a lot of products the price increases have been fully factored in yet.
Right.
So with a lot of consumer products, I expect or with many consumer products, especially in food, for instance, I expect those to perhaps increase. But there's a lot of stuff too, like just alone having, when we went through COVID, having all this container space being filled up by masks and medical supplies coming from Canada, that displaced a lot of the normal goods that you went through with all the port shutdowns and all the other issues with that. And it'll be interesting to see, because I feel like we have this big retail, people shopping on their phones or whatever they were doing, but a spending increase of retail consumers, that a lot of people bulked up on their inventory and now they're stuck with inventory. So I saw an article, I think it was Wall Street Journal recently, and it was about Target, and it was basically like saying look for large discounts on a lot of items because they ordered so much that now it's all here and they don't have enough people to sell it to. So I wonder if it will be that way for, somewhat for autos, or at least auto prices will be a little bit lessened. And we can, talk a little bit about housing too, but housing's also kind of an area too where you're seeing a lot of price cuts, and a lot better environment to purchase than it was in mid to late 2020.
Yeah.
If you can purchase in cash.
If you would like to learn more about the New Next podcast, find us at thenewNextPodcast.com, where you can suggest a topic you would like for us to cover. If you enjoyed what you heard, share the podcast, tell a friend about it, or rate us with 5 stars. We appreciate you.